Welcome to another Bondcast and Currency Exchange crossover, as events in the Middle East dominate headlines and markets. Regular listeners will recall that last week we combined both of our podcasts in the wake of fresh tariff shocks, and we've done the same this week with the conflict in the Middle East driving both currency and rates markets. Rest assured, we are hoping for normal service across our podcasts to resume next week. This week on Tuesday, we were lucky enough to host Scott Livingstone, NatWest Group's international advisor, on a client webinar to talk through the details of the conflict, how he sees this playing out in the near term, what the longer term implications might be, how much this matters for other nations within the region, how much this matters for the rest of the world, and the pressure points that he'll be watching in the near term. We were also joined by Paul Robson, our co-head of G10FX Strategy. He talked through the market implications, the reaction that we're seeing so far, and what he is watching as well from a markets perspective. What follows is an edited highlight from that talk with me, Imogen Bachra, Head of Economics and Market Strategy for NatWest Markets. Good morning, everyone. Thank you so much for joining us on today's call. I know that there is a huge amount going on, and I'm delighted today to be joined in the room by Paul Robson, our head of G10FX Strategy for Europe, and virtually with Scott Livingstone, the group's international advisor. So let's begin. And Scott, I think it makes most sense to really start with you this morning. Perhaps you could just take stock of where we are at the moment. It's clearly a very fluid situation with lots going on.
Yeah, Imogen, we're still in the shock and awe component of this Operation Epic Fury. The last data point I saw was the Americans and the Israelis have conducted 2,000 strikes since on Sunday. So 2,000 on Sunday. So intense activity forming this phase of it. That means it's very difficult to get accurate information in terms of damage, in terms of relative capabilities, and there's a great space for accidents, for misreporting, etc. So the fog of war is dense at the moment across the landscape. But in broad terms, I think I'd offer up a couple of points, Imogen. First of all, the key, I think, to this phase of the operation is very much to do with the management of ammunition and resources. So for the Israelis and the Americans, it's about how do they calibrate and control the use of the limited ammunition and weapons that they've got. And similarly for defending side, for the Gulf states, they've very much got to be careful with the control of the interceptor missiles that form the backbone of the air defense. And for Iran, however, it's pretty much the opposite. I think there's probably a sense that they're under pressure to use it or lose it when it comes to the munitions and the capabilities they have, because they could be seeing that time might be running out. So there is definitely something here about the tempo and the controlled tempo. But saying that, the pressure is very much on President Trump and probably Netanyahu as well, but certainly President Trump, to bring this phase to a close fairly quickly. Maybe we'll talk about that a little bit more. The other points to note from the ground at the moment, Imogen, is that the Iranian regime is projecting a sense of continuity, of stability. It's coming up with a 3-person council to run the country after the death of the supreme leader. And within the short list of possible successors to the supreme leader, we do see mostly hardline clerics, but there are a couple of more moderate or reformist names in that list. And again, that will be important as we move through into the next phase. We haven't seen some important things so far. We haven't seen any elite defections. We haven't seen any institutional fractures. And not yet, we haven't seen any civil upheaval, probably because it's too dangerous really to get on the streets. So those things are still to come, I suspect.
Let's pick up on those phases then. You said we're sort of in phase 1 right now. But when we think about the near term, next steps, the roll into phase 2 and beyond, how do you see this playing out, I suppose, in the very near term, the next couple of days, the next couple of weeks? What are you watching, and over what sort of a time horizon are you watching those things?
I think this phase will be measured in days rather than weeks. I don't think Donald Trump has the political space nor the logistical bench depth really to see this stretched out over weeks, not at this intensity, not at this tempo. So I think we are looking at a couple of days of probably heightened intensity, even greater munitions being used. There is some open source reporting of other aircraft flying in from America, which the disposition of that aircraft, of those packets of aircraft, would suggest that the B-2 bombers could be used in this campaign, as they were last year against the nuclear sites. So we are seeing another wave of US air power coming into the theatre, and I think that'll feature this week. So I think it's going to get more intense before things dip later on, and I think that's because of this political pressure coming at Trump from all sides. Really, there's a domestic pressure, but there's certainly a pressure from Gulf friends and allies in order to try and suppress the attacks on Gulf infrastructure and civilian facilities in particular. What's going to happen next? A period measured in days of even more intense air power, with the aim of suppressing these counterstrikes from the Iranians.
But how does this play out really over the longer term? You talked about sort of, what we would describe continuity candidates, if you like, in terms of Iranian leadership. Is that, presumably it doesn't strike me as a real regime shift then as a result of the conflict, but how are you thinking about the sort of longer term impacts of what might happen over the next couple of days?
If the question, Imogen, is does this mark the end of the regime or lead to the end of the clerical regime, I think I've got to say yes, it certainly accelerates that. But I've been of the position for some time that the Tehran regime, as it currently stands, was in serious decline, precipitous decline, really. And I think this operation and this conflict will hasten that shift. Will we see a sort of Venezuela type operation where the regime stays in place, but it is modified rather than changed? Donald Trump is keeping his options open, it seems to me, in certainly his public messaging and his public messaging by his senior lieutenants. They are keeping the space open for an off-ramp which would satisfy their requirements for constraints on Iranian capability towards progress towards a nuclear weapon, for example, or their manufacturing of long-range ballistic missiles, and leaving that open as a possible area for some kind of a deal that brings the conflict, the fighting phase, to an end. And I think that could be the area where we see, for the rest of March, I think there'll certainly be a wish to see movement towards that kind of a deal.
What are you watching, I suppose, both over the next couple of days, but longer term, to support what is your sort of base case scenario? What would be an indicator that things are moving in that direction or otherwise, or what are you most closely focused on?
I think there is something about watching how the Iranians are using their, as I say, their diminishing capability stack, and how carefully they are using their spectrum of weapons, from ballistic missiles through to fire and forget drones, through to maritime drones in the Straits of Hormuz. And I think that, again, we will get an idea of what pressure they're under as if we get data that illustrates the tempo of their use of those forces. We'll keep an eye on the Iranian maritime forces as well, for two reasons, I'd say, Imogen. First of all, the threat from mine laying in the Straits is significant, and that would indicate a more determined approach to actually stopping traffic going through the Straits. But also because President Trump has called out the Iranian maritime forces as a specific target. We should be tracking to see whether he's actually delivering on that statement. So I'm tracking that. I think the other thing I will be watching, and as we go through this week, we will be looking for signs of pragmatic politics, either coming from whoever the new Iranian leader might be, should that be the case, or from a regional player, maybe the Omanis, suggesting some kind of diplomatic channel back into Tehran to try and find a less violent way to resolve this dispute.
I just want to pick up then on what you're saying around the Strait of Hormuz, because that's obviously a big driver of the market reaction. What's your take on the impact of the conflict on the Strait, and how long do you expect disruptions to continue there?
Listen, I'm going to go back to my first comment here about the fog of war and the unpredictability of this particular phase. I think there's definitely something about the capability of the Iranian forces to present a meaningful threat to vessels who, at the moment, my understanding is are self-denying passage rather than having the route prohibited. That may change. So monitoring the Iranian capability is important. We mustn't forget that 80% of that the crude that goes through the straits ends up in China, India, Japan, and South Korea, and serious dependencies from India and China, that flow. So I think we do need to track this. It is extremely important, obviously. My final comment on the Iranian capability to disrupt maritime traffic is I'm reminded by the difficulties that the Americans and their allies had in the Red Sea over a period of about 14 months while the Houthis were launching drones and missiles at tankers in that passage. That was a difficult operation, albeit much smaller stack of forces being used by the Americans and their allies. But nevertheless, it was illustrative of just how hard it is to suppress launch pads and launch sites and logistical chains using air power when there is a sort of asymmetric approach taken by forces who wish to use rather cheap weapons at short range to strike vessels. This is not a straightforward operation. It could take some time. Finally, this initial spike would be aimed at reaching some form of political deal that would then reduce the risk.
Just finally then, Scott, one of the other big drivers of the market movers around the news that one of the energy providers in Qatar would be turning off its LNG supplies. Does this implicate Europe in the conflict more than it perhaps otherwise would have been necessarily from a sort of energy perspective?
Yeah, for sure. I think there are three perspectives that would lash Europe into this. One is energy, but let's not get it out of proportion. I mean, Qatar, after we started to turn off the taps of Russian LNG, only started to turn off the taps. We mustn't forget, and that energy is still there. It's diminishing from Russia. So, but at the moment, as far as I can see, the proportion from Qatar is roughly about 12% of Europe's supplies. The bulk of European LNG is coming from the States. 55-60% and rising. So I think that's where we would see that pressure there. The other two areas where I think we could see Europe lashed into this campaign, the first one is the political relationship with America. And we've seen some dissonance, I would say, between different countries, not least the comments from Keir Starmer. The third aspect is frankly, essence of the root cause of this. Europe has an interest in seeing Iran not be a disruptor in the region and not projecting threats into the Middle East and beyond. And for many years, European countries have been acting to try and mitigate the risks that would be coming. So there is a fundamental security issue that Europe will be addressing, as well as maintaining good relationships with President Trump, as well as defending their allies in the region.
Thank you, Scott. Paul, perhaps now is a good time to bring you in, because of course it is this kind of energy price rise, the potential for an inflation shock that the market appears to be most concerned about. How does this play out, do you think, over the kind of near term from a market's perspective?
Yeah, morning everyone. I think in terms of the market reaction, it's what you would have expected. And I think that provides a useful playbook for how we should expect markets to perform in the days, weeks, and potentially the months ahead. So if we think about currencies' reaction to weaker risk markets, the dollar doing well, I think that would be expected, although there would have been some uncertainty. People have been wondering about the dollar as the global reserve currency and whether that has shifted. We've always been of the view that it's still the primary global reserve currency, but that's different from having reserves move away from the dollar into other currencies. So I think that would have been expected on what was, I think, a surprise in the Middle East, not necessarily the start of hostilities, but it's the escalation into other countries via oil, and even overnight we're seeing it spread into Asian markets, and for a complacently positioned market, we're adjusting for that. So the scope of the move or the size of the move has perhaps been more than we would have had under our base case, because the base case was more benign. In terms of the impact on other currencies, it's pretty straightforward in these situations. The oil price, gas price is higher, so currencies like Norway, you'd expect them to do well. They have done well. Canada would have been another. But it's also important in these times to remember it isn't all about the oil exporters, but it is about also the energy importers. So places like India, those kind of things will come under pressure as well. So that's largely playing out, and it would have been exacerbated by, I think, market positioning. So I think the dollar weakening over the medium term would have been a well-held position. So the impact on currency markets that we're seeing is simply a reflection of that positioning as well. There have been some sort of outliers. So sterling has actually held up relatively well. I know those that are looking primarily at sterling dollar will be thinking that's not the case. But in these times, it's always important to look at the sterling crosses. So it's been really quite encouraging, I think, that euro sterling has remained relatively unchanged and actually gave back some of the gains that it saw at the end of last week, perhaps on political worries in the UK. Whether that continues remains to be seen, but one of the implications away from currency markets has been a repricing of central bank rate cuts in a number of economies, not most obviously the UK, where it's going to be hard for the Bank of England to look through this energy price shock, which ultimately tend to be deflationary. But in the UK, we've had a couple of examples where we've had an energy shock and it's just been more persistent over a longer period of time. And for a central bank like the Bank of England, they'll probably go more cautiously. In terms of bond markets, I was quite struck by how quickly markets went from sort of risk off, move into safe haven bonds, straight towards greater spending, defense spending, inflation. So even if you think the inflation shock is only temporary, this conflict feels like it's going to have a more persistent impact on spending, and you can see that in steepness of curves, and that might be something that we see in coming days. For markets going forward, the number one question is simply, how long does the conflict persist? And listening to Scott there, if it's another 48 hours, then we have a pause, and what kind of new leadership might emerge. A temporary rise in energy prices that doesn't lead to a persistent increase in inflation, but the longer it goes on, the greater the chances that that inflation shock is persistent. And just to give you an example, if you had a 10% increase in energy prices in the UK for a year, you're talking about 1 or 2/10 on headline inflation. So that is something that's almost like a rounding error. So how long the crisis goes on will ultimately determine how markets react.
I think I would just reiterate, Paul, as well, the point that you made around positioning in currency markets and that driving some of the move. I think that is very much at play in rates markets as well. And that's why we're seeing, probably, as you say, kind of outsized move relative to what your base case might have been, particularly in, say, the front end of the curve in the UK, and the degree to which those rate expectations have really repriced. And we're seeing a rise in those very front-dated yields. And although we are seeing a rise at the back end of the curve as well, it's been much sharper at the front end. And perhaps if you were to assume that the market was more concerned about the fiscal impact, you might expect to see those back-end yields rise a little bit more. That was the edited highlights from our client webinar from earlier in the week. If you're a client of NatWest and would like to discuss any of the issues that we raised, please contact your representative. If you like what you heard today, please consider subscribing to Currency Exchange for FX updates or Bondcast for rates updates. Thanks, see you next week.